Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank India, and we are here with another episode of understanding what's happening with several currency pairs basis on domestic and global factors. So as usual, we start with the domestic factors. Flows have been decent enough for us. If we talk about the equity flows for the month of July, it is to the tune of 35,000 crores. And if we talk about the debt flows, they have been to the tune of 20,000 crores. So basically a very good positive month in terms of flows. Also, if we talk about the levels of Nifty, they're trying to approach the 25,000 zone. They have been a bit hesitant where, it's just touching those levels and reversing. But I think it's important that if that level takes out, then obviously there is possibility of 25,200 also. But as of now, it's consolidating between 24,800 to 25,000 broadly. If we talk about the FX reserves, we are again at all-time highs of $670 billion thanks to the rising FCAs, rising gold reserves, and also the SDR position is also higher. So all three factors have contributed to the rising FX reserves for us, which also remains a very healthy sign in terms of our import cover at large. If we talk about the Brent crude prices, they have been in our favor as well. The Brent crude prices have gone down towards $79 per barrel, where there have been demand concerns, globally, which is pushing the crude oil prices lower. But as of now, still it has not assisted rupee that much, though it could have, because of several other factors which have been playing around. So as we discussed last time, also it's Chinese yuan, which is to be under watch because a slow, steady weakening has been seen. Though some kind of recovery was seen in the last week, but still it remains important factor to watch out. Secondly, the forward premiums have been rising for dollar INR, which also suggests of the buying patterns there at lower levels by possibly the intervention also seen at lower levels, plus a genuine import buying has also been seen there, which is obviously putting the dollar rupee pair above 83.60 zone at this point in time. Broadly, even if we talk about narrow zone, it's still trading between 80.65 to 83.75. So the question is, would it break that 75 mark, that is the 83.75, or would it continue to consolidate? According to us, our view states that there have been a possibility of one break can be seen of 83.75, where next levels can be seen of 83.90. We are not seeing a sharp depreciation of rupee at this point in time. There are a lot of positive factors also when it comes to the Indian rupee. So it's a matter of time, and we may see some appreciation again for the rupee. On the contrary, if we talk about the Bank of Japan's policy, they raised rates as expected in sync with the market expectations by 15 basis points. So they were at around 0% to 0.1%. Now they have gone to 0.15% to 0.25%. Also, they have been announcing that the tapering of the buying program, the bond buying program, that is the JGBs, Japanese government bonds. Uh, at this point in time, they were having around the buying program of 5.7 trillion yen, which will be reduced to 3 trillion yen by 2026. So every quarter there will be a tapering of 400 billion yen uh, till the point in 2026 we go towards 3 trillion yen. Again, everything was in line with expectations. A knee-jerk reaction of dollar yen was seen till 150, 160, but then it again bounced towards 153 levels. Again, if we talk about the Fed policy, which is again due now, though there is no expectation or anticipation of a rate cut in this policy, but it's quite important to watch out the way scenarios have been building, and the CME Watch tool is predicting almost 100% possibility of a rate cut by Fed in September. So what kind of tone they hold and what kind of press conference Q&A happens, that will be very important to watch out. Dollar index have been just consolidating, waiting for the FOMC to come out. We see dollar index having a strong support at 103.20, while resistance at 105.50 odd levels. So broader range plays is happening for the dollar index. 10-year US Treasury yields have also been seen consolidating at around 4.15% to 4.2%. We have seen 10-year GSEC cooling off towards almost around 6.91%. Broadly, if we talk about and sum it up for the dollar rupee pair with our expectation and anticipation, then we expect dollar rupee to trade with a very important resistance immediately at 83.75 levels. But if broken, as we discussed earlier, we foresee 83.90 to be tested. On the lower end, we need a close below 83.55 to get that consolidation back to the 83.40 to 83.70 band. So that's all from my side, friends. Thank you so much for your time and hope you found our video insightful. Thank you.